Hello, traders. Welcome. Good morning, good afternoon, good evening to some, and welcome to today's Friday market wrap up by Bratton through Bratton Academy. And my name is Kenny Simon with you on the 14th of October 2022 on today's market wrap up live webinar. So I hope you guys are doing well, and I hope you guys have actually backed up some pips throughout the week. It has been a crazily volatile week, and it has been filled with trading opportunities, of course, through the volatility, but also loads of risk events that have actually brought about risks as well. So I want to talk about a couple of things with traders today, because I've been getting loads of questions about heat maps. I've got loads of questions about the step-by-step trade plan, as well as the psychological numbers. Now, I've got all the areas being covered through video tutorials. I've made special, small, short video tutorials on each topic, showing you the theory of it through my PowerPoint presentation, as well as on the live market itself and how you apply them. So these are all going to be available on the 10.academy website or dashboard. So this way you guys can actually self-learn. In self-paced learning would actually be of advantage for you, so that you guys can go back to it and then apply it over and over again. But everything boils down to practice. So also, I would encourage you guys to ask questions during the webinar. Type into the little comment box on the YouTube. If you are streaming through live on YouTube, you can type onto the comment section for your questions. If not, if you're actually streaming through Zoom, for example, or you've clicked onto the Zoom link, as usual, type into that little chat box to ask your questions as well. So you can ask your questions at any moment of time. Now, let us just start with this Friday by talking a little bit about what goes on into the news, because this is what I would like to always embed into the minds of traders, is to understand that it's probably best not to jump straight onto a pair before choosing it. Now, before choosing and picking the right pair to trade for the day, in my opinion and personal experience, it's probably best for you to conduct a little bit of a sentiments market analysis first before you get into the charts. Now, when you get into the charts, of course, you want to do a trend analysis. So let's do that practically step by step, so that you guys would understand what is best to do in the very first instance when you are actually wanting to trade. Now, it does not matter about trading sessions, does not matter about all these. When you are actually wanting to trade and you're thinking of trading, the best thing to do is to evaluate the current news situation, sentiments, whether it's a risk off or risk on. You could be in your computer through the laptop, but not in your chart at the first instance, because that would actually then increase your risk level and decrease or reduce your probability. Because what we would like to do is to firstly research and analyze the market. Now, we've got the 10 Academy at the moment, as my and your preferred dashboard to conduct all the research and analysis. Basically, it means that you have all the tools that are necessary to actually research and analyze the market very shortly. I mean, I understand that most traders would actually be thinking about how much time would it all take. It wouldn't take much time. With practice, it would actually be less than 15 minutes as well, because you are being guided by us in the group as well, through Bratton Academy, and we are guiding you through step by step, and then you guys are also in communication with me on a daily basis. So feel free to ask questions, of course, but the most important question to ask should actually revolve around the market, not about where to enter, whether we buy and sell, because that would actually be shortcutting everything and then increasing your risk as a trader. Always think about your timing at the time that you're thinking to trade. What is the market condition at that moment of time? Is it a risk-off environment? Is it a risk-on environment? What are the risk events that are actually happening at that moment of time? Now, Today, we're talking about loads of events that have actually been, rolled over. And one of the biggest events that has been, rolled day by day has got to do with the inflationary mode globally. Inflation, recession, and now we're talking about mistakes that's been done by the new prime minister in the UK that is actually a rippling effect, or it's got a ripple effect towards the global economy as well. And we're expecting the housing market to crash as well. There's a lot of things that are actually going on in the UK at this moment of time. So hence the reason we have actually seen loads of candles, mother candles going up like 100, 150, 200 pips even. And that I understand would actually be tempting loads of traders, especially newbies, beginners out there trading the Forex market. Now, you need to understand when you're trading onto the Forex platform or a Forex related platform, the MT4, the MT5 especially, and the other platforms as well, when you're trading Forex pairs, cryptocurrencies on a Forex related platform, you're actually trading CFDs. So you can actually trade stocks as well, cryptocurrencies, various other instruments as well. But what you're actually literally doing, you're not owning anything. You're not owning the stocks. If you're trading Amazon on to the live platform as well, you're not owning any stocks. So these are all categorized as CFDs. When you trade CFDs, there are ways in trading the CFDs because it's highly volatile, of course, and also it's the biggest market, the FX market, the biggest market amongst all financial markets. Is bigger than stocks about 40, 50 times over as well. So when we're trading CFDs, we would need to always be vigilant, very, very disciplined, focused, and you need to have the patience, mainly because you're exposing yourself onto a very, very risky market already. There are risks already in there. So it all depends on how you're approaching the market as well. The method part or the strategy is only 10%, but the mindset covers 60+%, and the money and risk management covers about 30%. So you've got 90% on a bigger chunk to actually take care of, not the strategies and the entries and the exits straight away and applying of the indicators. That all comes later on. The foundation is really important. The foundation should actually be your understanding of the sentiments, the trend in the market, what's going on. So then you're able to pick correctly the right pair or instruments to trade for the day, for the time that you are wanting to trade, not on other people's time, not on what's been going on through your indicators. We don't really need to bother about that. We need to bother about ourselves, because you guys out there and girls, traders, are, especially in the retail industry, are actually putting in their hard-earned money to actually trade Forex. So why would you want to increase your level of risk exposure and reduce your probability just from the way and the mindset that you actually have and the way that you're approaching the market? Okay, so it's my responsibility and job as a mentor to guide you through on how do you actually research and analyze a market properly first, in order for you to be able to pick the right instruments for the day to trade. Then all other things would actually fall into place much better for you as a retail trader. What that means is that even if you've got your strategies in place, you've got your methodology or strategies that you have actually been testing and it's been working great for you, please do not let it go. Of course, you need to cherish them, and then you need to adopt other maybe strategies or little techniques or approaches that would actually only sharpen your existing strategy. That is the whole key concept behind our mentorship at Bratton Academy. We have no intentions whatsoever to replace anything. So whatever that has been working it's probably best to incorporate that into a step-by-step trade plan. In which area do you actually apply your strategy? It should actually be in the fourth or fifth step, just before the fifth step, not at the first, second, third step, because your first step should actually be analyzing, researching the market to understand the trend, the sentiments of the market, then to understand which where are the flows of the money by traders going into which instruments or group of currencies or group of instruments, group of asset classes. So we will then get a better idea of the trend direction. When we're able to get a better idea across different time frames, then you are going to be in a much better position, more confidence in also applying your current strategy onto that particular trend, that particular pair that is actually trending on from short, medium to long term. This is basically the key in having a better analysis of your instruments that you have actually chosen. So let's take a look at the 10.academy. Now, this is where you would find all the videos. Not yet. I just want to emphasize that I have not inserted or post because I've just got more more work to do into all the topics. To prove to you guys, of course, I will show you guys what I've been working on. So as you guys can see, one of the PowerPoint presentation slide would come under the video tutorial series. Now, the video tutorial series by ATI London and also Breton is accredited by ATI London, where they would govern all the standards and then check through all the content to make sure that it's all proper and properly communicated, and you guys are educated properly in whatever topics that I have actually set forth. Now, with this in place, we have got loads of topics that will be covered. One of it is the psychological numbers, of course, also on how do you actually use, within fundamental analysis, what are the subtopics that we will actually be covering, including the economic calendar itself, including how do you actually connect one event with the other event, for example, like NFP. Before NFP is the ADP. How do you actually connect that together? How important is the GDP, but what is the GDP and what is it connected to as well is really important. Right now, we are talking about inflation figures. We're talking about interest rates. Interest rates are really key now. That is controlling everything, controlling the price of gold, controlling, the US decisions in interest rates and everything else. And then also controlling the inflationary mode that is actually going on. One of the biggest thing that is happening right now is there is a kind of a trade war going on within the oil and gas, and there's a bit of a separation at the moment between NATO, between the Russian bloc, between the US is within the NATO group, and then we have got various other blocs as well that are actually separating themselves in dealing with the US in terms of the goals. So the US controls the demand, but then the Middle East side of it are controlling the supply of these oil and gas. So there's a bit of a war that we cannot actually be seeing, but then we're being impacted by it in terms of the inflationary rate that is actually going on. So this is the thing that is actually happening behind the curtains, behind the scenes, and it's got to do with all these war between them. There are fights going on behind the scene about who is controlling oil, who wants to control the oil, who controls oil basically controls the world. So that is basically the power parity that is going on at this moment of time. Okay, so there's a lot of things within the geopolitics scenery that needs to be also aware of. So I'm going to be creating lots of short videos on these as well. So as you guys can see, I would explain exactly what psychological numbers are. I'll explain to you and give you all the psychological numbers that we have here. There are 4 sets of them: 0, 0, 20, 50, 50, and 80. They all depends on the last 2 digits of the 4 decimal place. Then I'll take you through and show you the live chart. So we'll do a little bit of psychological numbers as well, just so that you guys get a bit of an idea of what psychological numbers are. But what's important are the other topics that you guys have actually been asking a lot of, especially the heat maps and things like that. So let's get to it, and we go on to the news first, basically because we've got loads of trades that I've actually seen in various of my groups, and we have seen a lot of rush by traders wanting to chase the movement of really huge movements, like what you can actually see on GBP AUD, for example. Now, this is where I would like to point it out that when you look at a movement like this is on the 4-hour chart for GBP AUD. You've got this very big movement. Visually, it's really a huge mother candle, a bullish mother candle, and that was worth about 400 pips, if I'm not mistaken, on a single body of that mother candle. So that is just a huge potential. If you're looking at what do you call that, trading at one lot, you have actually made, and buying it, you would have made about 4,000 in within just a couple of hours, US dollars. But that's not the whole, focus should actually be of how much you can make in a single candle, mainly because the single candle movement are mostly tricks as well to capture retail traders like us, because it does not communicate the trend. A single movement of it does not create the trend. So you may actually be tempted to think and believe that you are in an uptrend, but then look at how the reversal have actually happened. Now, that reversal on GBP AUD on the 4-hour chart, for example, had actually occurred on one of these rate horizontal lines that I have already, laid it out, the day before. And I have also emphasized that a lot to all the traders out there, that you need to look at either one of these rate lines as the reversal potential, and indeed it reversed exactly on the lines. You've got the opening price as well, reverse exactly on the rate line, and then you've got just 1 pip away for the wick to actually reverse as well, the highest wick. But we can see that every one candle that you can see, let's say the first 3 candles down, bearish candle, they have all touched the rate line that I've actually drawn. So right now it has actually dropped the GBP AUD, and the GBP AUD have actually dropped, trading at 1.7886. But the best part of it all is that that wick, the end of that needle-like formation, have actually stopped and bounced off a support line that I have also drawn about a day or 2 before. So I would like to emphasize the power and magic of price action. Psychological numbers are price action based as well. Price patterns, like geometric patterns, harmonic patterns, all these patterns are price patterns. So they all relate to price action, together with some indicators that I actually use, especially the EMAs. The EMAs, exponential moving average. These lines are also support resistant, that actually works hand in hand with price action, supply demand as well. So you guys can also see that I've been applying this for over 10 years, the 3 EMAs as it is, but exponential moving average, not the normal moving average of 50, 100, and 200. So just a little touch up on certain things, because we've got loads of questions coming from the GBP AUD that's actually moving as well. Right now, what is happening is we have got a pin bar type needle on the 4-hour chart. This is on the technical side of it when we get into technical analysis, but we shouldn't be getting into technical analysis straight away when we're talking about a pair or an instrument that we would like to trade. What you would need to do, and this would actually help you a great deal to be very consistent in trading, is that when you think of a pair that you would like to trade, do not go straight onto the charts and asking us all about buying and selling entries, because this will only hurt you more than hurt us, because you would need to actually have the focus on what revolves around that pair. For example, the country that are involved, the currencies that are involved. So if you're talking about Euro USD, for example, then you shouldn't be going straight onto Euro USD, drawing technical analysis, and then wanting to trade Euro USD, because how would you actually know that the Euro USD is actually a good pair to trade for that time that you are thinking of trading? Now, this is the clear rule of trading, is to firstly understand that pair, and that pair is made out of two currencies, right? So if you've got Euro and USD, you would need to get a little bit of inside information from me and our team at the Bratton Academy, of course, on that's your third step, the insider's information. If you are not sure where to do that analysis from, or you're not very familiar with fundamental analysis, then always come through me. But the question should actually be on the trend and the sentiments and news that revolves around these two countries. If we're talking about not two countries, but then Euro USD would revolve around the Eurozone, and then the Eurozone would be made out of 11 plus countries in the Eurozone, right? But then we've got three major countries within the Eurozone that controls the economy or contributes the most to the economy of the Eurozone. Now, that would actually be Germany first, and then you've got France, and then you've got Italy. So if it is, really positive in terms of economy, politics as well, quite steady in Germany, and then followed by the rest of the countries, then this would actually give a bit of a pump up economically to the Eurozone, mainly because these countries control the Eurozone in terms of its economic superpowerness and its contribution to the economy, now to the Eurozone's economy. So this is really important. That's on the Euro side. And because you're talking about Euro USD, then you need to also understand a little bit about what has been going on at the time that you're thinking of trading, not to just go on to technical at all. I don't look at the technicals at all, because the technical side of it, when you're looking at a screen like behind me, that's the MT4 or MT5 platform that you have. Now, this is just a window to the market, exactly like the windscreen that gives you guidance of where you can actually drive to. Imagine if you were to put a black cloth onto your windscreen of your car, you obviously couldn't see where you're going, right? So this is your windscreen, or the window to the market. That's all, just to know where you are at, where's the price at, whether there are potential to move upwards, downwards, and how has it been moving so far. And that's just the window of the market, whatever that you can actually see on the outside. But in order for you to actually get a better picture, clarity of that, you would need the fuel to the market, and the fuel to the market that moves, that creates volatility and liquidity has to be coming from the fundamental side of it, outside of your chart, and that is your news side of it. News, revolving Euro, revolving US, and then just to get an idea, because you would never know what have actually happened at that minute that you are actually going onto the chart. What if there is a act of God, or a calamity happen, a strike broke out, or a bomb exploded, touch wood, but all these kind of stuff that you have no control over, you wouldn't have known if you have not actually gone on to the news, just to get a little bit of an idea of what have actually happened. Now, and then we ask questions and we discuss, and then we actually analyze and then do a trend analysis. That would actually be us analyzing the market, being more of an investor trader as opposed to a trader gambler. Unfortunately, the retail market has got a performance rate of 95% or 95% plus of the market loses. Not only that, the only reason for that is because the remaining 5%, they don't actually do what the 95% of the market does. The 95% of the market don't do what the 5% of the market does, which is to analyze and research the market before you actually trade. So most of the 95% of the market are just jumping into technical analysis, thinking that this is the way to trade the market. So I would suggest that, probably you want to change that mindset a little bit just to test out what could actually happen outside of the chart first, and then look at your performance from there. Because, change, the only permanent thing in this world is change. We need to change things to actually look at a better result. If you see that your results not at par with what you expect, that basically means that you've got to change something to change the result. The result will not change if you have not changed anything that could change the results. Okay, so that's basically it. Now, any questions, guys, of anything that you would like to know at this stage? Because it's very important for me to address what I've actually mentioned. And now we would go very closely to the heat map so that you guys can understand. And then if you guys want to know about the heat map again, I think the best is to watch the video again, this video that will be recorded. So watch it over again, so then you will get the whole idea of the heat map. So remember this, guys, okay? So you guys want to know about heat map again, you will watch the recording of the 14th of October 2022, today's recording, right? So it will be immediately available in my channel, in the Bratton Financial Trading Academy channel on YouTube. So you just type Bratton Academy or Bratton Financial Trading Academy, you will see there, and then click on it on the channel itself, and you will see that every time I've done the webinar, it will be automatically available. So you guys don't actually need to ask me for the recording link at all, no more, right? Very easily, just go onto the YouTube channel and you'll find it there straight away. Okay, all right, good. Now let's get on to with the Action Forex heat map first, because we have actually begun with the Action Forex heat map, and then I would love for you guys to test both heat map, not only test but apply both heat maps, the one on Action Forex as well as the one on 10.academy, because there's just no harm for you to have that comparison. And the reason why I would encourage that is so that your mind is kept busy, not your emotions. Because when you have all this self-talk about the market without researching the market, then it becomes it gets emotionalized, and then you start to get into the FOMO mode, FOMO. The FOMO stands for fear of missing out. And when the market is moving, volatile is, volatility is quite crazy, you get really tempted to need to trade. You will feel and believe and start to believe that you need to trade. If not, you'll miss out. Now, that would actually bring about FOMO, fear of missing out. And when you get FOMO coming into you all the time, you will get a syndrome that would actually then encourages you to overtrade. And then when you overtrade, you become more of an over-analyst, because you do an over-analysis, and over-analysis is paralysis. So everything else gets jammed up, right? So we don't want to reach to that stage. Now, let's talk about heat map. Now, heat map, very, very simple. I'll go on to both heat maps. Give me a second. We'll go on to the 10 trade heat map as well. And when you go into tools on the 10.academy, all you need to do is click onto the tools section right here. Now, once you've clicked onto the tools section, does depend on your internet connection as well. Okay, let me clarify this thing about where to go and things like that. Simon, your question is great. It's asking me about best site to visit. Now, you don't need to go to sites anymore. Let's just focus on 10.academy, all right? Except for the heat map. Heat map, I want you guys to do a bit of a connectivity between the 10.academy's heat map and also the Action Forex heat map, because we've got some tools in the Action Forex as well that will be applied and brought about into 10 Academy. At this moment of time, the top 10 movers in the Action Forex are not available in the 10.academy dashboard. So we are working on that, and once we get everything back on the 10.academy, then everything should only done through the 10.academy dashboard, which I will basically do that as well as a trader myself. I'll only focus on one hub, so we don't need to go everywhere. The reason for the news to be on 10 Academy is mainly because it's the feed has been provided by forexmirror.net. Now, forexmirror.net has amalgamated all the sources from very big and top sites all in one place, and then it feeds it to 10.academy. So you don't actually need to go anywhere for the news side of it, Simon, okay? So when you go on to the 10.academy, you click onto news, and I've showed you earlier on that the news comes from various sources, so you don't need to go anywhere else for the news, okay? Only 10.academy. That is the best thing to do. Now let's go on to FX heat map. Now that comes under tools. When you see you would see all other tools. Economic calendar is here as well. We've got the market data, technical analysis there, real time. We've got technical analysis where I will be actually feeding all the signals technically as well in the technical analysis side of it. So I would also add fundamental analysis so that you guys would know what is the fundamental analysis for the day, what are the most important things to know about risk events, economic data and everything else. And then we pick the right pair from the fundamental side of it. Then we move on to technical trend analysis and then technical analysis. Okay, so let's click onto the FX heat map right here. Now, we'll do a bit of a comparison between the heat map. Not really a comparison, actually, what could actually happen when we have both heat maps from Action Forex and the 10.academy. These are different feeds, and I've noticed that we have got certain times, certain trading times would actually be beneficial to follow, 10.academy's one, and then sometimes it's better for the the Action.Forex. Action Forex website, but both would actually sort of complement each other. I've not seen a total conflict of it, but they complement each other. Sometimes they actually even show, different ones show in different time extra data, and then you can actually use that data to actually trade. Now, we've got 10.academy. This is your Forex heat map on 10.academy. Let's talk about the one on 10.academy first, because whether it's the heat map on 10.academy or the Action Forex ones, we always start with currency on the left, not the currency at the top, not the currency below. Currencies on the left. The currencies on the left are the ones here, Euro, USD, all these ones, right? So what this means is when we are looking at the Forex heat map on the 10.academy, you would need to look at whether or not you have got a row, right? A row horizontally that is all red, bright red, or all green, bright green. Now, let's say we don't have it all, but we have most of the box. Let's say under AUD, we have got loads of green highlighted ones, right? But then when we look at, I'll give you another example. We look at this one here, CAD, right? CAD has got only one lighted bright red, but the rest are not lighted up, right? So we forget about CAD because there's just no activities there yet, right? To show you that there's some heat going on in the trend. So let's pick this one here, for example, like AUD would probably be your best ones because you see it's all green, right? And they are most highlighted in green as well. We want to look at it as horizontal row. But then when we come to Action Forex, we look at it as a vertical row. That's all. But then we always start off with the currencies on the left. So what this means is we have got currencies on the left panel, and we've got currency at the top panel as well. Currencies at the top panel here. Start off with your currencies on the left. So let's say I'm looking at AUD. We've got lots of green boxes, which shows bullishness. Red shows bearishness, right? Then we look at the numbers as well. The numbers are building up, 0.50 plus, and then we've got the highest one is 0.53 against GBP. So what that means is that AUD first, because you start always on the left, right? For the one in 10 Academy. Also the one in the heat map in Action Forex. We start with the currencies on the left. Currency on the left is AUD, for example. AUD is 0.54% more bullish and basically very bullish against the GBP, which basically means AUD is a strong one, bullish uptrend against the GBP. GBP is the weak one, bearish against the AUD. But then we want to look at GBP AUD. I think it's all the combinations are quite fixed. So we want to look at GBP AUD. So GBP AUD is the weak one because GBP here versus AUD, you can see it's weak, right? It's bearish. So that's how you look at it. It's very, very simple, right? Nothing to worry about. There's no stress in looking at the heat map, and there's no stress as well to go and dig in much deeper about whether or not it's very accurate. You want to go into the statistics. There's no need for that because this is just a generic first step for you to understand an overall picture, because you are going to do a deeper, better trend analysis and technical analysis later on. You are going through the PRICE trade plan to filter out all the things that's not necessary. So you don't actually need to evaluate this tool or the tool in Action Forex and then ask me questions about their algorithms and all that. I don't even bother about that. Never been bothered about all these things because it's not necessary. We have to learn to be focused into what we are using at this moment of time. It has been used for over 7-8 years at this moment of time, and it has actually been working quite fine. It's not 100% accurate. It does not need to be 100% accurate because you need to pick and choose all these ingredients and make a final decision based on all these ingredients. And these ingredients, when you combine them together, when you combine your heat map with your top movers, and then you do a trend analysis, you do a price action analysis through psychological numbers as well. You look at the bodies of the candle, and then you draw trend lines, you apply Fibonacci, then you enter exit with psychological numbers. All that are ingredients that would actually make things better and better for you to make that decision of whether to buy or sell. So we don't really need to evaluate any tools, any indicators. Got traders asking me about the EMA, whether the MA is better. Is not necessary. It's just follow through first, because everything has already been calculated, already been evaluated, already been experimented and tested to bring results. So let's just follow it through. Okay, because I've done all the necessary testing, 7,000 to 10,000 charts all across my trading experience as well. So I've been only testing everything all the time to make sure that everything that's manually being shared with you are always going to be working. And I'm experimenting that already. So you guys out there and girls do not need to evaluate the indicators that is used, the tools that I am actually recommending, because everything is already in one package ready for you to use out of my 15 years of evaluating them. So it's a shortcut for you guys. Okay, so just follow and ask questions. If you are not sure of the tools itself or not sure of the analysis, you can ask these kind of questions, which will be very, very beneficial, because at the end of the day, whether it works, whether whatever I'm teaching, whatever I'm sharing works or not, should actually only be proven from your trading account, right? If from what you have learned then your trading account have actually grown, that basically means something have actually worked. That's all I'm concerned about. I'm concerned about the results and the outcome. I'm not concerned about anything else. And I think that is probably a good way to learn to train yourself every day to focus, right? So you need 3 basic ingredients to be built up over time. It doesn't happen overnight. Your focus, your discipline, and your patience, right? And then this focus, discipline, and patience should work within that 3 pillars of success, which is the mind, the method, the mind, the money, and the method. Okay, the money basically is your money and risk management. Your mind is the psychology of trading, in how you are actually dealing with analyzing and researching the market through the PRICE trade plan. The PRICE trade plan has been designed, experimented by myself to help you develop patience, discipline, and focus. Right, so that is why I came up with the PRICE trade plan. So you have a step-by-step approach or a template. These are not strategies. These are just things and approaches, little techniques that you can choose to use or not to use within all these letters of the word PRICE. It's not a technique, it's not a strategy, it's just a template trade plan. You can put your own strategy into it and you apply it, but then you need to follow the steps. PRICE. What I am actually doing right now, the heat map and everything has the steps already in it. I'm actually following this step for over 10 years. And basically, whenever we've got traders asking me, do I enter AUD, USD, or GBP USD, or GBP AUD right now? Do I sell now? And that I cannot answer that, mainly because I've not done the appropriate steps. I want to go back to step 1 and I will evaluate that following step 1. And that's what you should do as well. You start off with a P. You're not sure what the P is, what the step 1 is, ask me that. And please do not ask about entering the trade without conducting a thorough research and analysis following a trade plan. Now, most traders, when they are actually trading, they don't actually have a trade plan. When you have a trade setup and a technical setup, using this indicator and you use that indicator and you draw the line and then you see this and you see that, everything is on the chart, everything is technical analysis. That's not a trade plan. You do not have a balanced out trade plan. You only have a trade setup. So don't be confused with a trade plan and a trading setup. A trading setup is not a trade plan, right? Now, a very efficient trade plan should be a trade plan that has step-by-step, but a step-by-step approach, but combining technical and fundamental, okay? Because technical analysis could be accurate at certain market condition and certain time of the year. And sometimes it needs to be combined with fundamental as well, because now we are ruled by loads of fundamental manipulation from the big boys, from central banks, and a lot of happenings that have actually been going on. We need to apply and adopt fundamental and technical combination in order for us to get a better picture and not to be heavily weighted on fundamental news only or technical only with technical indicators and stuff like that. Okay, now this is just my personal opinion of being able to mentor you to become strategic traders and balanced traders in order to take care of your 60+% psychology of the trader. If you are actually heavily weighted on technicals, or you believe it so much, 100%, and then you use only technical indicators, robots, EAs, that will condition you in a certain way. Now, that would then be quite limiting your skills as well, because when you can actually fish for pips manually, then you would actually be having a skill that could actually help you survive in both bad and good times. So during COVID times, you know, we've built loads of traders that have actually lost their jobs, of course, but they have actually been quite successful in generating an income, perhaps even double or triple what they have actually got from from a full-time pay just by being, because they're trapped at home, for example. Some of you guys have experienced that. And then the only thing that can actually be done is running an online business, and one of it is actually trading. So it's important to actually treat trading, the Forex market or CFDs in general, as a business. So I would rather be mentoring you as a tradepreneur, like an entrepreneur, but a trading entrepreneur is called a tradepreneur. Now, a tradepreneur would actually then be looking at it as an overall picture, and your patience, discipline, focus would then benefit you for your other businesses as well. You see? Okay, so that's basically it. I hope it has actually been useful for you guys on the heat map. It's not difficult, as you guys know. Only just start off with the left panel, and then you look at it. For 10 Dot Academy, you look at it horizontally. Okay, now we move on to the Action Forex heat map. Now, the Action Forex heat map is also the same. You look at all the currencies on the left. We've got this big heat map right here. This is a generic one. It covers all the currencies. Does it matter? You click on 4-hour, daily, weekly? No, it does not matter. On both, it does not matter. On 10 Dot Academy, on this one, it does not matter. The reason is because when you get into specific currency, you start to look at currencies first, right? Then you look at other currency, then you combine them to make a pair. That's the pair that you choose to do a trend analysis. Now, if we look at USD's heat map, you start off with the left. The left is USD, right? USD is very, very bullish because it's dark blue against the euro on the 4-hour chart, right? But it is only bullish because it's light blue in the daily chart, right? So on the heat map of Action Forex, you want to only look for a whole row that is either dark red or dark blue, because the darker color are strongly bullish or bearish, right? So now let's look for we don't have a whole 4-row that is dark blue or dark red at this moment of time, but let's go see, like this one here, USD versus JPY is quite close to being very, very bullish against JPY. So USD is very bullish against the JPY at this moment of time on the 4-hour, on the weekly, and on the monthly. Only the daily, it's looking like it's bullish only because it's light blue. But imagine if the daily one as well turn into dark blue, then we have got all dark blues. Then what I would like to do is that if I've got dark blue on 4-hour, on daily, on weekly, on monthly, the whole row tells me that USD is very, very bullish against the JPY. Then I will go onto the chart to do a trend analysis, not a technical analysis, because I want to confirm whether or not on the 4-hour, daily, weekly, and monthly, I want to confirm with my own method of using the EMAs whether or not it is definitely telling me what it's telling me on the heat map. So I will not believe the heat map until I do my own trend analysis on the chart myself to prove it. If there's a mismatch and it's not ready, then I just leave that pair and go and look at other pairs that has got a straight blue, dark blue, or a straight red ones, dark red. So we could also, on Action Forex, you could also use another tool that's called the Action Bias. It works close to a heat map, but sometimes it's got extra information, maybe extra algorithm and all that. I'm really bad with algorithms, so we can also use that. Now you can see that in the USD JPY on the heat map side of it, you don't have all 4 dark blues, but then when you look at USD JPY, you got all 4 up arrows on the Action Bias tool. So we've got loads of tools here that you can actually use, but like I've mentioned as well on the chat on one of the groups, we actually can use Top Movers on Action Forex, currency heat map, action bias, and also volatility chart, right? So this action bias right here, the only one out of all these currencies that you can see all arrow up or all arrow down. There's no arrow down on all 4 time frames, but you have got all arrow up on all time frames. The hourly, this one here, they use the 6 hourly, the daily, and the weekly. So what I would like to do is to confirm, whether or not USD JPY is good for me to consider to trade only if I find that it is also uptrend in my trend analysis. So let's do this one example on USD JPY. Okay, so let's go on to USD JPY. This is Euro USD. Let's go on that, because I've seen all blue on the action bias tool, and I want to look at whether or not it's worth for me to get USD JPY, but I have to conduct to trade USD JPY, I need to conduct a trend analysis. Now, when you do a trend analysis, you need to match minimum three consecutive time frames. If you've got a match in 4 or 5 time frames, that's even better. That means that the trend is strong and it's smooth and it's clear. So we start off, let's say, you can start off with your 30 minutes chart. Now we're doing a trend analysis for USD JPY, right? So it's looking really smooth, really beautiful. We've got the 3 lines going upwards, which is the first thing we see. We need to make sure that it's not entangled, it's not touching each other, the 3 lines as well. It looks really nice and smooth, and the majority of the candles, current price as well, they're all moving upwards. The angle that is moving, to me, it's more like a 2 o'clock, 1 o'clock type angle. If it is steeper, the better, stronger. So what we need to do is we compare the 30 minutes now with a 1 hour chart. Now, when I go to the 1 hour chart, it's looking like the 3 lines are steeper. The candles at the top above all the 3 lines are also moving towards the sky, and it's quite high. It's quite slopey as well. It's quite steep. The slopiness or the slope of that angle that the candles are trading are quite actually strong. So it's quite bullish. So it's been bullish from 30 minutes to 1 hour. Now we go on to the 4 hour chart. Now, when I go on to the 4 hour chart and I zoom out a little bit, it looks like it's even steeper and it's got more power. It looks like, visually itself, it's so steep that it's pointing up to the sky like a straight line, but then it's not straight like that, but it's quite steep going upwards. This is a 1 o'clock type angle. If it's a 12 o'clock angle, then it's very, very steep and it's almost horizontal. It's very, very strong. So now it looks like from 30 minutes to 1 hour to 4 hour, it's building up the trend clarity and the strength of the trend just from looking at the 3 lines and looking at the candles above all 3 lines. So this is a good sign because we've already got 3 consecutive time frames showing you a match. So we cannot ever look at a trend or want to understand a trend with only 1 time frame. Never do that. So you've got 3, then you've got a nice story about the building up of the trend to the upside. So in other words, USD looks like it's still got loads of power to the upside. Now let's compare with daily chart. Now when we go on to the daily chart, again, it looks too strong. It's almost going towards a 12 o'clock angle and it's almost going horizontal and it's getting stronger and stronger, right? So we go on to the 1 hour chart, 30 minutes like this, 1 hour, 4 hour, daily like this, right? And then we go on to, let's say, you can always compare weekly as well. Now, weekly shows, boom, almost 12 o'clock angle, almost horizontal. So what does that tell us all? USD JPY is probably the best, clearest trend to the upside. USD is still going to be strong. There's still buying opportunity for USD versus the JPY. Now, we maintain our focus either on 1 hour, 4 hour, but we can always go back to the 30 minutes as well. Now, what we do next is we want to confirm again, how strong is this trend? The trend is clear. There's an uptrend going on, but how strong. So we want the strength of the trend to be confirmed to us with a lagging indicator called the ADX. So it's still lagging, it's not 100% accurate, but it's going to give us a lot of clue how strong it is. You know why it's important for us to know how strong it is with the ADX? ADX stands for the Average Directional Movement Index. We need to only insert the level 25 in there, and I will show you how to use that. And this is important so that we can understand whether or not we will be waiting for this pair that we have chosen to reach your TP or not, or it's got some delay. All that could actually be seen from your ADX, right? How strong that particular trend is. Now, it is an uptrend, so how strong is the uptrend, right? So let's go and insert the Average Directional Movement Index. You click on to insert under indicators, in the category of trend, you will find the Average Directional Movement Index. You click on it. Now, all you need to do is go onto the level. If it's the first time that you are selecting it or using it, you just go onto the levels tab, click on to add and type the number 25 in that tab. That's it. And then you click OK, right? So when you click OK, you have got you need to only look at the blue line, not the dotted yellow and the pink line, just the blue line. The blue line, and you've got a level that you have put it yourself, number 25, the level 25 right there. Look at the blue line, whether the blue line is above the 25. It looks like it's well above, very nicely trading straight line up above level 25. So what that means, on the 30 minutes chart, the uptrend for USD JPY is strong. Great news for us, right? So now we go on to the 1 hour chart. Now on the 1 hour chart, the blue line is still above and up straight, very nicely done. Again, on the 1 hour chart, USD JPY is very strong, very bullish. Good news for us. Now we go on to the 4 hour chart. Now on the 4 hour chart, it is incredibly strong because you got all this line upwards, very far up there, the blue line on the ADX. So again, it's amazing. It's fantastic for us. It's up to 4 hour. It's very strong, right? So what that tells me is we just got loads and loads of trading opportunities to the upside. The trend is clear, strong, and smooth for USD JPY, a bullish trend, okay? That's fantastic for us. So we've got trading opportunities. Now, just as we go, daily chart as well, showing ADX above, the weekly chart as well, ADX is above. So it's going to last a lot longer in terms of the uptrend for USD JPY. Now, if we want to trade more and we want to have more pairs to trade, the best thing to do is to look at correlated pairs of USD JPY. Now, I'll show you how to do that at another, session, or we can always, discuss in the groups itself. The most important thing is to focus on one and to look at, and not to get overly excited with this uptrend. Uptrend is really strong. So I know some of you guys out there, especially guy traders, I mean, women traders are a little bit more careful. You would have already clicked onto the buy button now, and that basically means you have successfully gambled the market and gambled your money as well, right? Mainly because this means that you have traded, but you are not trading the market. You've been gambling the market. If you have no steps and you have not looked at the risk, now we need to look at the risk side of it. Why? Because you've got the P. The P is your first step, right? P-R-I-C-E. P stands for many, many Ps. Psychology of the market, patterns, price action, psychological numbers. Psychological market means the sentiments and the trend that I have actually mentioned to you through the heat map and all that. That's all covered within the P section, right? So within the P section, also picking the right pair is the P. Right? So we've done that. We've picked the USD JPY. Now we need to go to the R. The R is your risk and reward, your lot sizing, but most important is the word risk. We want to look at the risk of this pair. We are very excited at this moment of time. It's got a very strong trend, right, to the upside. But what is the risk of it falling? It's going up, great uptrend on multiple time frames, but your question in step 2 is got to do with risk, R, the R, okay? So you got PRICE. So the R, the I is me, insiders information, to give you a little bit more boost, to give you the guidance and all that is insiders information. That's step 3. Step 4 is C, your confirmation of everything we talked about and we discussed. Then we plan our E, execution. The 5th and last step is the execution of the trade, whether or not execution of the decision to whether trade or not trade. If we decide to trade, whether it's up or down. Okay, so that's basically, or even pending order. So now let's stick to the risk side of it. Now, what is the risk of it falling? Now, this is where we want to look at to the left. Now, if we go on to daily, or let's say the 4-hour chart, and we just zoom in a little bit, zoom out a little bit, especially on the daily chart, we need to follow that price line, that current line. The problem is it's got not much reference to the left when we are looking at the USD JPY. So it's got a big gap here, long time ago, a drop of price. Now it's basically picking upwards. We are at 147.68. Again, back to the topic of risk. We are trading at 147.69. As 147.70 goes up, we will bump into 1780 psychological level. So let's put in the risk topic or step 2, we can always start to draw 2 lines onto the chart. Okay, so after you've done your trend analysis, you pick the right pair, you go to step 2. Step 2 should always be, what is the risk? You see it as downtrend, what is the risk of it reversing to the upside? If you see it uptrend, what is the risk of it reversing to the downside? That's basically very important. And one of the things that increases the risk of a reversal are not only your support resistance lines that you get from the candles, top and, the wick, and also the closing opening price, but also psychological numbers. So as you guys can see, I've already explained to you guys that I've already worked on the videos on that PowerPoint presentation on psychological numbers. I'm working on all the other topics to combine it with the topic of psychological numbers. So we don't look at just one topic at a time. We want to combine all the topics so that you can use it and apply it, because this is how it should actually work. You combining techniques and little approaches and strategies, not just one and then just grab one after another. No, you need all of these to give you a collective decision-making tool. It should be a collective information to make that decision. So here we have got a very strong candle going on. Even in a weekly chart right here, it's just showing a lot of bullishness. Okay, so let's see what if we can see the monthly. Even on the monthly, we don't have any more reference point to the left for other candles. So what we need to do right now is to make sure we are able to understand where we are trading at in the middle of which psychological levels. Okay, so at the very top we have got 147.80. So I will mark the 80 line, 147.80. okay, 147.80. okay, there you go. So it's still very close. Let me just, because right now it's already at 72. So I think it's probably best at 148 instead. So 148.00 is your next psychological level up. Need to, okay, we've got that. And then the next one down, closest psychological level down or under the current price is 147, 148 on the top, 147.90, 147.80 would probably be better. So 147.80. There you go. Right. I'll just zoom out a little bit here. 147, not 80, 147, 50. Sorry about that. Let me just 14750 as your psychological level bottom. So now we've got current price for USD JPY trading in the middle of two psychological levels at 148.00 and 147.50. So it needs to break out above 148.00 only to buy at 148.10. If we are looking at, we're seeing that there's a lot more potential to break out to the upside. Whether or not there is a correction or not, we're not 100% sure, but what you can actually do is to insert the stochastic to look at whether we have divergence. Divergence are opposites. So what we do is, let's say on the 4-hour chart, we want to look at whether we've got a divergence or not. Now, it looks like we've got a mini type divergence. Maybe we go to the daily chart. Let's just check. Maybe on the 4-hour chart, we've got a small divergence going on. I'll just show you how that divergence looks like. Okay. All right. So here, for example, we have got no clear divergence on the 4-hour. I'm sorry. I think it's just if there's no divergence, that basically means that we don't have a reversal expected anytime soon. So this does actually tell me that there's just more room to the upside. So what you would need to do is maybe if at all traders are interested in a buy, it's probably best to buy only after prices break out of 148.00 psychological level, heading towards 148.10. So you've got two entry areas that could be possible to enter the USD JPY in a safer mode. Number one price of entry is 148.10, or if you want to be safer and more conservative, you can also trade at 148.30. So it's either 148.10 or 148.30. Then you can start aiming at 20-30 pips first, and then the exit, re-enter again, and then adjust it with your psychological numbers, which you will get more of what it needs to be explained properly in an organized manner, not into the chat and then just answering questions one by one from people who've actually asked it. It wouldn't actually be a good way of you being educated about psychological numbers, because psychological numbers are so powerful for entries and exit that it cuts your risk by almost 40+%. Okay, of the time. So it's been experimented over 10 years. It's been working the same way, and I hope for it to work the same way as well manually for years to come, especially for currencies and also for oil. Oil, whether it's WTI or Brent. So I've explained all that as well, what the application is, how do you actually apply it to different types of currencies, especially with the JPY, you've got 2 decimal places, all that kind of stuff. But the sets of psychological numbers, they remain the same as 4 sets: 0, 0, 20, 50, and 80. This I've actually used over 10 years, and it's not changed one bit, and it's been the best for entries and exits only, not USL, not any other things, just entries and exit for currencies and oil. Okay, so at this moment of time, it's probably still waiting game. I would choose USD JPY as a good pair for us to trade, because the trend is clear, the strength is great, and it's clear, it's smooth. It's just that it's trapped in between 2 psychological levels at this moment of time. Now, if you want to trade more pairs and you want to correlate it to USD JPY, what you can actually then do is simply going to Google and you can type MATAF, MATAF, okay? MATAF is a Russian website with tools as well. It's called MATAF, MATAF, and you just type the word correlation, right? So then you will be led to this here, www.mataf.net. Okay, not .com, .net, and you go onto the Forex correlation table, and I just go down here. Now, please do not over-evaluate any tools that I am sharing with you, because it's already been evaluated, already been experimented. So you just enjoy the flow of using it and applying it, and then enjoy the flow of the outcome, which is consistent profit. This is what we want, right? So at this moment of time, if you want to do evaluation, if you are an IT person, I'm not an IT person. If you are a programmer, I'm not a programmer. You want to know more about how you can, know about the algorithm of it, the data, the feeds. I honestly don't have a clue on it, right? I only know how to use it for the benefit of us all traders, to actually use it as one of the tools amongst many other tools that we are using as well. Okay, so here, for example, on USD JPY, we have got a row here. Now you look at it, start again on the left. It's the same like the heat map. Start on the left, USD JPY, and then you want to look for the highest number. You can see if it's negative, it's negatively correlated. If it's positive, it's positively correlated. They move together like this, or they move together but opposite direction. Okay. That means they affect one another. They are closely correlated. So here, for example, we've got a big negative number right here is your 92 here. Big positive number right here is about 89 right here. So we don't need to evaluate further. What does it actually mean? It's just statistically, this is the point of reference that they actually use in numbers. Negative mean negatively correlated, positive correlated. Look for the biggest number. Now, here, for example, let's look at 1992 right here. So 1992, we have got USD JPY negatively correlated to NZD USD and also NZD CAD. So you can always go to NZD USD and NZD CAD as well to actually evaluate further. It's actually opposite or negatively correlated to the USD JPY. So this is how you can actually expand and diversify and increase the number of currency pairs that you are trading just by one chosen correct pair with a strong, smooth trend. You are able to correlate it to other pairs, whether negatively correlated or positively correlated, in order for you to actually trade more, but then being on the right side of the trend as well, and understanding that pair being correlated to a correctly chosen pair, which is at this moment of time, for example, USD JPY. Okay, you guys have seen it. It's so easy, very clear trend, very nice. Why not just follow through the process and trade it like that? Okay, so we can always check NZD USD very quickly, and let's do that. NZD USD would be a second pair for us to actually take a look at. Let's see. There we go. We've got NZD USD right here. Very, very nice. We have got it at 1 hour chart. It does not look like it's clear, mainly because, straight away, NZD USD on a 1 hour chart may not be a nice pair to trade only from looking at the 1 hour. It's not clear already, the trend. You've got three lines like this, and then you've got the current price inside the three lines. That's not a good sign. And then you look at, let's say 30 minutes, the same thing, three lines on a sideway like this, no clear trend. You go to the 4 hour chart, it's moving downwards a little bit. It's more biased to the downside for NZD USD, but starting from the 4 hour chart. So not now, maybe from 4 hours onwards, then we will see that the trend might actually build up to the downside. So it is actually building up slowly under the three lines. Three lines are going like this. So right now, we cannot rely on 30-minute chart, 1 hour chart. That's not the time frame that we will be looking at all. So we can start with 4 hour, but then now we need to compare it with the daily chart. Now, when we compare 4 hour and daily, then we look at, okay, there's a possibility of prices falling more. There's more build-up of downtrend. So then we move on to the weekly chart as well. Now, weekly chart shows the same thing, not too bad. It's also showing downward type. So yes, we have got that going on at the moment for NZD New Zealand dollar, but starting only 4 hours and above. So 4 hours and above, probably anytime between 4-hour and 24-hour, we will then see a buildup of downward movement or downtrend for the NZD USD. At the moment, I'm not going to look at shorter time frame or anything like that. Why? Trend's not clear. I don't touch that time frame. I don't look at it at all. I will only work on more things as the time frame is clear with the trend. Okay, if the time frame is not clear with the trend, I forget about that time frame. I look at 3 consecutive others. So now the 30 minutes, 1 hour, 4 hour is not consecutive, because 30 minutes, 1 hour, we have to take it out. So what would actually work better is to start off with 4-hour daily weekly. So 4-hour daily weekly is your 3 consecutive time frame for New Zealand dollar to do a trend analysis on. But it also means that it will be, the trading opportunities for the downside for New Zealand dollar, US dollar is NZD USD is for medium to longer term, not for now, because the shorter time frame does not give you clear trend. Okay, so now it's on the downside. Now your risk question is basically, when would it actually be going up? So because it's actually on the downside, 4-hour weekly, monthly, 4-hour daily, weekly is showing us downward trend. So because we got downward bias and downward trend, the question to ask is, where could it possibly reverse to the upside? Now, this for me, when I look at it in the weekly chart, just as you guys can see on my screen, it is an upside down type cup and handle pattern. So straight away, it does actually shows a possibility of a reversal to the upside, mainly to create the handle of the cup. But overall cup and handle pattern usually signals, if it's an upside down cup and handle pattern, it usually signals a very big drop later on after the reversal, come down and then go down further up. So the reversal usually is expected, following this kind of pattern. This is called a cup and handle pattern. It usually reverses at about 50% from the base of the cup right here, okay, to the mouth of the cup right here, because it's an upside down cup, not a normal cup, right? A normal cup will signal it going upwards. This one is a cup like this, and then it will make a handle and then come down, and then boom, go down more. But now it's going to make a handle, so it's going to go up most probably, and that usually is around 50%. So we have possibly got some buying opportunity going on, but not just yet, right? I've got a very big buying opportunity, but then it'll go zigzag, 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 create a 5-wave Elliott wave type thing, maybe go upwards and then come down from this end, and then come down and then go down further, and you've got more selling pressure. But at this moment of time, it looks like it's got more upward type movement. Now, if we're looking at the what do you call that, upward type movement, we look to the left and we can see that you've got a bullish candle right here. So that bullish candle opening price is there, okay, and we can use this bullish candle to guide us to see what's the potential for the shortest period of time. So yes, we've got some buying action taking place, but it started before in the past with a buying support area from the opening price of the mother candle itself was at 0.5672. So I think now we are only at 5.621. So in order for us to be at a safer buy zone, it's probably better for price to go up much more so that we are not threatened by the chance to drop earlier. So once it goes above 0.5680 and above, I think we can start buying only at 0.5690 and above. Okay, so now too soon to look into the buy opportunity for NZD USD, but it could come in. So we need fuel from fundamentals to push up the price. So if things are improving in New Zealand with the interest rates and things like that, inflation's going up, then we have got that potential to go on to a buy for NZD USD. Okay, I hope that makes sense for you guys. And we've got many other factors to also look at how do we actually look at buying opportunities and trade it in stages as well. Now, if we look at different time frame for NZD/USD on the 4-hour itself, there is a little bit of a short-term type movement to the upside that could go up to a shortest term buying opportunity at 57 plus 5700 and above. So yes, there is a bit of a window there, but I think as it goes above 5700, it has more and more confidence for us to look at the upside movement for NZD/USD. At this moment of time, a little bit too soon, because we are now trading in a bearish zone. We have got this mother candle right here, marked by the red line, and we've got the territory right there, but I think it could reverse. So we've got a potential support area at 0.5596 area. So it's very close to 5600 as well. So 5600 would actually be a very strong support area that if you guys are already selling and you are selling NZD/USD at this moment of time, make sure you exit at above 0.5600. So maybe 5610 would probably be better to exit to take your TP. Okay, right, there you go. Okay, I hope that has been useful for you guys, and this is basically it. And I hope, most importantly, you guys are clear of the heat map side of it and the first P, the first step in the P section of the price trade plan. All right, with that, I would like to end the session on this Friday, and I hope you guys got a lot from that today. If you guys have got questions, feel free. Any questions at all from you guys? Any questions? This is the time to ask loads of questions, okay? Mainly because you guys are bombarding me with questions in the group during the time of trading, where it could actually be answered hands-on in this session like this. So this is probably your best chance to ask questions, and then we can apply it practically onto the live market straight away. Okay, no questions, very quiet. I guess you guys are all ready to ask me questions in the chat instead. Okay, right, so that's basically it. We're trading at 0.5619 now, going downwards, okay, for NZD/USD. So we've covered a few, but most importantly, your understanding on the heat maps and the first steps of the PRIC trade plan, the P side of it, as well as the R, the risk side of it, especially drawing your psychological levels as well. Okay, with that, if no questions, right? Okay. So no questions, we will end the session for today. And thank you very much, guys, for your time in attending my webinar today, and wishing you guys a great weekend ahead, and happy pipping until the market closes. Probably best to do an intraday trade, mainly to wrap up all your trades in order for you to avoid any risk for market gaps and all that on Monday onwards. Okay, with that, thank you once again, and have a great weekend, everyone, and take care. Bye-bye.